Hi everyone and welcome to today's morning report on Wednesday the 16th of September with me, Rich Pro Market Analyst at Tech Markets. Well, the European session's got off to a positive start really. Had a decent run higher on Wall Street overnight into the close, 1.3% up on the S&P 500. Sentiment seems to be very strong. We've had some really interesting moves actually in the markets in the last sort of 24 hours really. Let me just start off with showing you first of all the dollar, which is fairly stable. It's not really doing a great deal, but the big moves are coming on the Treasury markets. Treasury yields strongly high yesterday, the 10-year pushing out to a 6-week high. But most interestingly of all was this sharp move higher on the Treasury, the 2-year yield, pushing out to levels not seen since 2001 apparently, massive move. Now, does this now mean that the bond markets are pushing towards pricing in a rate hike? Very interesting, because obviously the bond markets tend to lead financial markets, and at the moment both 10-year Treasury and 2-year Treasury yields are strongly higher over the last 24 hours. So really interesting moves. This is happening in front of the Fed meeting, which starts today, and you'll get the announcement tomorrow evening at 7 o'clock UK time. What you are seeing also is some consolidation and a bit of support actually finding on the oil price, which is pushing higher, and that is helping to improve sentiment on the commodity currencies as well. And also what we're seeing is, as I said, equity markets pushing on as well. The VIX volatility continues to drop away as these equity markets just continue to push higher actually, interestingly enough. So what we are sort of looking forward to is obviously this Fed meeting tomorrow, but there is a fair amount of data that we've got on the agenda in the next day. Certainly today's focus will be first of all on the UK unemployment, and that comes out in a few minutes actually. Expected to stay around 5.6%, but the interesting data will come with the average weekly earnings, which are expected on an adjusted basis, which strips out the volatile bonuses, expected to increase to 2.9%. So that continues to suggest that real wages are rising in the UK as inflation stays around flat. So that is interesting. That's at 9:30. Then at 10 o'clock we have the final reading of Eurozone inflation, CPI, expected to stay around 0.2%. But then into the afternoon we've got the important US CPI data, the inflation data, which is the last key tier 1 data for the States before the Fed announces monetary policy, and it's expected to stay around 0.1% on the inflation data. But interestingly enough, the core data, the core inflation data, is expected to rise to 1.9%, which would be the highest since the middle of 2014. So that is the expectation there. So that's the last bit of real driving data potentially for the Fed to mull over before tomorrow's announcement. Now, what we have got is the chart of the day, which is the euro yen. Now, I'm seeing very interesting moves in the euro yen on the last in the last week or so. Where last week I started talking about the prospect of this being a big head and shoulders pattern. It turned out that it was going to be a range trade, and it didn't get the 2-day close below the support at 133 that I was looking for. So you then had a big turnaround, and the bounce came off 30 at the RSI, which is exactly where it happened last time in July. Unwound the momentum, but interestingly enough, it's just unwound towards this pivot level around 137 again. This is an old pivot level that dates back several months actually, which has provided resistance and support several times in the past. On Friday, it hit that pivot level at 136.95 and fell away again, and it started to just drift off again. These momentum indicators starting to lose that upside. So this rally certainly suggests that. Certainly suggests that this little rally that we've had last week has lost impetus and is starting to turn lower. This is the hourly chart, and you can see this sequence now of lower highs being built. And if you saw a break below 135, which is yesterday's reaction low, I think that would continue this drift lower. You'd then start to look at the support around 134.20 before 133.75 as well. So a couple of levels to work with on the downside if you break below 135, but certainly these sort of momentum indicators taking on more of a corrective view in the last couple of days. The formerly strong hourly MACD lines are now negatively configured, falling over around neutral. The formerly strong hourly RSI is now negatively configured, falling over around sort of the mid 50s and pushing towards 30. So this would suggest that rallies are being sold into. It's not drastically bearish, but I'd say that there is a tendency now for the downside pressure to be greater. There's a bearish bias in this chart, and you'd be using sort of rallies as a chance to sell. The big volatility event remains tomorrow night, and I think that's obviously going to position forex markets significantly for the time to come. But at the moment, moving into this data, the euro-yen chart is sort of take on more of a bearish near-term bias. So I wish you good luck in your trading today, and I will speak to you later. Thank you.